Happy Wednesday, Southern California. We are back at it. You got Tammy ×2 in the house. Today we are in where, Tammy? Where are we?
We're in Little Italy, and it's absolutely stunning.
Yes.
I know I say that every time, but we do live in Southern California.
And we do pay the sunshine tax, probably more than most places, and I'll take it, right?
Absolutely.
The backdrop today, you guys, yes, is Little Italy. We are in a beautiful building, right literally in the middle of everything, close to the airport, close to retail, close to restaurants, and we are on the rooftop. And today, with the backdrop being the way that it is, we are going to be talking about some insane topics that are all relevant in today's market. We have a special guest today, our favorite lender. Of course, we wouldn't be, lying if we said he's our most favorite lender. Daren Greig with Hot Mortgage. Daren is one of our he is our go-to guy when it comes to getting shit done with your loan.
Yes.
And getting shit done with the pre-approval process. And I thought, since the market has been crazy for the last few years, let's talk to Daren a little bit about the rates, how crazy they are right now. They've gone from virtually free money a couple of years ago to where we are today. Dumb down the rate process, dumb down the pre-approval process, because for buyers, it can be confusing, especially for first-time buyers. Right. And kind of have a little conversation about how much money is too much money to put down on a house if you are buying a home. Because
that's a great question.
Home buyers are like, well, I have 60 grand. What can I do with that? And Daren, right? What are your thoughts on this? Welcome. We're so happy to see you. You're in Florida right now, living your best life. And Tammy and I have been dying to get you on to talk about this because, again, you've always been that guy that not only gets our clients the best rate, you beat, if not match, any rate out there. You've always, if we have a 17-day close, you're closing at 10. So obviously your shit's put together right. So who is it? How is it? What are the ins and outs? Let's talk about dumbing down the rate process and pre-approval.
I mean, the rate process, right now, obviously, with inflation going out of control, that's really what affects interest rates. Bondholders hate inflation because if you have a bond or a mortgage, for example, is a bond, and that's a debt. So you're getting 3% interest for 30 years on that. If inflation is 6%, you're losing money. So obviously, then they want to raise rates to keep up with inflation, so they're not losing money on their investment. So it's really kind of how the inflation impacts your interest rates directly. Since about middle of December, so the last 3 months or so, the rates have gone up. Most I've ever seen in my 18 years doing this. In December, people were getting 2.75, and now they're getting 5%. It's crazy. One of the biggest challenges with that, as you know, when you're getting pre-approved and you're pre-approved at 3%, let's say, and the rates go to 5%, well, that can make a huge difference on what you're able to buy. And when you're out shopping, that can be disheartening for a lot of people when they're finally find the home. It's so competitive out there. They finally find the home they want, and they realize they can't afford it anymore. So it's really important to keep up with that.
Yeah. So Tammy, we've had clients that we've had to explain this to the best of our ability because obviously we're not on the lending side of it, where they're like, well, wait a minute, I got pre-approved 60 days ago at X, and now here we are, and what do you mean my rate's going up? Don't you have? Haven't you had that happen?
Absolutely, and the challenge with that is obviously they didn't lock the rate.
Right.
So with that not happening, your rate's going to go up. You take that chance.
Right.
And that's what's happening right now. But one thing I do want to point out to people is even though our interest rates are going up, they're still really low in comparison to a few years back. Yeah. So, but although, and Daren just mentioned, it can kind of knock people out. If it goes up, the certain buyers won't be able to buy.
Right.
So we're seeing it. We've already seen it. Yeah. We're seeing properties come back on the market, and here, and I'm sure you're seeing it over there as well, because for one reason or another, they can't afford the property anymore. Right. They didn't lock the rate, whatever. So that's very important, especially right now. And do you agree in regards to getting your rate locked as quickly as you can? And how long can you lock that rate?
Yeah, for sure.
Yeah, there's different ways of doing it. You can lock a rate. Most people wait until they get a contract accepted to lock a rate. That's the cheapest and kind of best way to do it. Because if the rates, if you lock it on what they call TBD, a to be determined property, you can lock up to 60 days, but it's going to be a worse rate just because the investor's taking a risk when there's a high likelihood you won't close in that 60 days. And then they basically fronted that money and lost some money on that end. So they're going to lose. They don't like to do that. And if the rates go down, you're stuck with that too. So it's kind of, in this environment, it may have made sense to do it, but again, you just don't know when it's going to stop and when it's going to level out. And then you paid more for no reason. And again, with it being so competitive, you just don't, again, I mean, how many times have you showed people homes for 6 months before they get something? Or it's not like it was where you get in the house in a week and it's not a big deal. So
rate locks are good for how long? So like if somebody came to you today and said, hey, I'm ready to do this, right? Is it a 90 days? Is it a 60, 90 day? I know I'm hearing different theories on this.
So you really, when you go into escrow, we just lock it for the days. The escrow, if it's 21 day escrow, we lock it for 22 days, usually just give us the next day. On it to be determined, you can lock it up to 90 days. But again, the longer you lock it, the more expensive it gets.
Right. And what does that cost to lock your rate for? Right. Can you give an example?
Well, for example, if you're going to lock it on a 30 day, let's say the rate's at a 5%. If you lock it for a 90, the rate might be 5.5%.
Okay.
And so again, if you think the rate's going to go up more than 0.5% in that 90 days, it makes sense. But if you don't, then it doesn't make sense.
And I've heard two different things in regards to if the rate goes down, then that's it. It doesn't matter. You cannot go down. There's not a one-time option to go to that lower rate, or is there different?
A lot of banks offer a float down, but honestly, it has to go down so dramatically that it's very unlikely it's going to happen.
Okay.
You'd have to go from like 5% to 4% by most banks, and it's, again, in that short of a window, it's very unlikely that's going to happen.
Right. I remember a few months ago, and I think I sent the article to both you and Daren, where they mentioned that come April, they were basically going to create what I think and I feel, and we talked about this, kind of an equitable housing opportunity, for those buyers that are under a certain amount. And I think the average was like $800,000 or above, or if it was a secondary home, I forget what that was. But I remember thinking, oh my gosh, is this going to create more issues and challenges for those that are not pre-approved up to that amount?
So the high loan balances.
Yeah, the high loan balances. Yeah.
People that are buying second homes and that they're getting loans on them.
What are your thoughts on that, Daren?
Yeah, they put in a big hit for anyone that's buying it's called a high balance. There's high balance counties, like San Diego obviously is a high balance county. So you have the federal loan limit, and then each county that has like a higher cost of living, they'll allow you to go to a higher loan amount and still be a Fannie Mae loan. But I think I don't know why they did it. It doesn't make any sense to me, but they put in some massive pricing hits for those people. And so almost now where you're almost better off doing like an FHA loan at that point, even if you have 5% down or even 10% down sometimes, because the rate on that's going to be better. It's made for a difficult situation, especially with rates going up as fast as they have been for a lot of those people in that bucket.
And a lot of people are going with the ARMs, correct? So they're doing 3 and 5, or is it 5? Is it 3 still or 5?
There's only I haven't seen a 3 in a while. There's 5, 7, and 10. 7 is the most common one. The 5 on the 5-1 ARM, you have to qualify at 2% higher than the start rate. So it can kind of, even though the rate may be 1/8 of a percent lower, your qualification is going to be much less. 7-1, they don't make you do that. So that's kind of the most popular one.
Okay.
So I know there's some buyers that, and this is something I think that would help them understand, that can go either FHA or conventional, right? So what are the distinctions between, obviously, for whatever reason in this market, and we've had this conversation, this is a whole nother podcast, the VA buyers are completely overlooked right now. And it's quite fucked, in my opinion, because they, of all people, have given their lives to serve our country, whether they're a first-line responder or otherwise, military personnel, and they're qualified buyers, right?
The best buyers,
Yeah, but unfortunately, they don't have the opportunity to waive all contingencies, right? They don't have the luxury of a conventional buyer, let alone an FHA buyer. So talk to us a little bit about the differences between conventional, aside from, down payment and et cetera, between FHA and conventional, because there are buyers, and Myra was one of them, where, she was approved, she's a conventional buyer, but she could have gone FHA or otherwise. FHA buyers are like, well, what do you mean I can't can't because I can only do 3.5% or 5%, but the condo isn't FHA approved. Why can't I go conventional?
Yeah. So, I mean, a lot of times it's a credit issue. I mean, FHA is much more loose on credit score and like credit past history. Like if you've had bankruptcies or if you've had foreclosures or things like that. It doesn't affect the interest rate as much. If you have a 660 credit score and you're trying to do conventional 5% down, for example, the rate and the mortgage insurance is going to be way higher to do conventional versus FHA. If you have great credit, then conventional is typically going to be better. But it's, FHA is great. There's just a lot of, again, if you're buying a condo, it can be more challenging because it has to be, like each condo association has to go through the process of getting approved by FHA. And that's costs money every year to renew it. There's been a lot of documents, and a lot of them they don't know that they have to do that, and they just don't bother doing it. So.
Okay.
I have a question for you. It doesn't involve rates, but we, in particular, my building, because I'm forgetting the name of the form, but there's the form that they have to fill out, the HOA has to fill out saying if there's any litigation or if there's any deferred maintenance, et cetera, et cetera. Are you having challenges with those? Because we have had, in my particular building, there is a unit that's been trying to close, and it's not because our HOA doesn't feel comfortable answering, and our attorney doesn't feel comfortable answering certain questions in regards to deferred maintenance because they say it's too broad of a question.
Yeah.
Are you having any challenges with that?
There is a workaround on that. We just had one up in Riverside that my partner was doing. I can't remember the exact specifics, but it was very similar. I think they have to get like an attorney opinion letter or something just stating that it wasn't like urgent or they're not allowed to answer that or something like that. And it was able to get through. I have to get the specifics on it, but I was kind of watching the emails, but wasn't personally involved with it.
But it's possible, so that's good to know. So we need to get you to get our my building because when you can't sell it, that means for us.
Yeah, and there's also a lot. I mean, if you put more down, there's limited review versus like a full review of HOA, so that helps a lot. But yeah, I'll have to get back to you on that. The specifics on how to get around that.
At least we know there's something you can do. That's all that matters.
Yeah, because they basically are told they're not allowed to answer. But yeah.
Yeah, this reminds me of something that we just went through, and Tammy and I were talking about this. And this is obviously with Myra, right? Where we had submitted an offer. They were in the process of countering us for acceptance. And there were only 8 condos in this particular development, and one owner owned 5 of the condos. And that was an issue in terms of her, the pre-approval process because of the HOA situation, one shareholder owning more than a majority of it. Talk us through that a little bit, because that happens a lot where in smaller developments where buyers they're ready to go, they're out for acceptance, but yet, I'm sorry, one owner owns 5 out of 8. It's not going to happen. And even then, if it went for review, kind of walk us through that.
Yeah, they don't want one person having all the voting rights. They basically determine whatever's going to happen to the property. So if someone owns that much, then they can decide to demolish the thing, and you don't have any, you can't say anything about it. Right. So that's kind of the main thing. But it depends on how much you put down. Again, it's anywhere between 10% to 25%, depending on how much you put down of how much someone can own of the development. Unless it's the original builder. If it's the original builder, then they can own as many as they want.
Right.
But once they've sold them off, once they've if it's just some random guy that bought 50% of them, then that's a problem.
So while we're talking about that, and again, how much is too much to put down? I mean, granted, it definitely brings down the loan balance, right? Obviously up front. But are there situations where even if a client has 50% to put down, is that something that you would say, oh my gosh, absolutely put 50% down because it's going to bring your $1 million home down to a $500,000 loan, but yes or no?
Yeah, it really depends on that person and what they're doing with that money. It's, if you're retired and you really need a set payment that you can afford, then it's smart to do that. You're still trying to build your wealth, and you can invest that money with other places or buy an investment property, put it in the stock market, do something else with that money. I think that's a better choice, but a lot of people just hate having debt and they prefer to have a lower mortgage.
Lower payments, yeah. Have you had any situations, Tammy, where you've had, and again, I keep referring back to Myra because this is all, with her, everything's kind of happened at once, where, you know, she pre-qualified on her own just fine, but seller wanted a certain amount in terms of the purchase price, but she was only pre-approved shy, 15,000 shy of that number. But she was able to get her parents to co-sign, and they gifted her a certain amount of money. When and during that process, cross-qualifying it has to take place. Then there's a gifting process, right, Daren? There's a letter or something that has to show that, you know, even though her proof of funds don't reflect X, there is a process in which it can kind of override, not override that, but kind of support the fact that, hey, she has more than enough in terms of proof of funds. And that's, I think Fannie Mae, there's a Fannie Mae template letter that shows gifting.
Template letter, yeah. It's a gift letter, yeah.
Yeah. And how often
states where that money is coming from, and that it has to be a direct relative. It used to be more loose with it, but now it has to basically be a parent, a husband, a wife, brother, sister, something like that. It can't be just like a friend or
right.
a cousin.
And it doesn't have to be seasoned at all?
No, not at all.
When does seasoning come into play?
So seasoning basically comes into play. They're getting to the point where they're only asking for one bank statement a lot of times now, but they basically want to, if you have a $50,000 deposit in your bank account and you're making, you know, $6,000 a month, that's unusual. So they want to know where that money's coming from. If you're a straw buyer, they're kind of just trying to prevent fraud and things like that. That's what the issue. So if it's only 1 month bank statement, then it needs to be seasoned 31 days, basically. It just can't be on that statement that we see. And if you need 2 months, it needs to be before that. So that's where the seasoning, because if they see it, it doesn't matter if it's 6 months ago, they're still going to ask what it is.
Right.
So if you were to give 5 tips or any amount of tips, if you will, or suggestions to a first-time home buyer that has never even started the pre-approval process. They don't even know what their credit's like. They don't even know how much it requires to get a single family, let alone a condo or a townhome or whatever it is. You know, obviously there are certain criteria, and Daren's so good about this, and we've had conversations with clients of ours and submissions where we're like, listen, we can tell in 2 seconds when we talk to them, the first thing you need to do is talk to Daren. And what he will do is he'll be transparent with them first and foremost, because we can't help you unless you're being honest about your financial situation. So the first thing we always say is talk to Daren, and here's the reason why. He will give you the blueprint on what you need to do to go from where you are right now to home ownership, whether that's 1 month, 6 months, or a year. Daren will tell you, hey, dude, you know what? You're ready, but you need to pay off a few things. Pay off some credit cards, give yourself 3 to 6 months, and then you're ready to go. Or, you know what? You're ready to go. Let's rock and roll. Which, mind you, very few lenders, A, take the time to do that. B, will even have that conversation with you until you're ready, because that's just how it is, right? So the fact that you give them the blueprint and the outline, if you will, on how to go from renting to becoming a homeowner and anything that happens in between and what to expect, that's full transparency on your part, which is why we love Daren, which is why we always use Hot Mortgage, which is why we will always use Daren and Hot Mortgage, because we know what we're getting. You know, when you throw in the commercial lenders like B of A and Wells Fargo, they work 9 to 5.
You need communication.
Yeah, and Daren's legit available Monday through Sunday, even if he's on the golf course drinking, and I call him and I'm like, dude, I need a pre-approval. And then he's like, okay, done. He'll send it over in 5 minutes. On freaking a holiday, he's like answering his call if he's traveling and he's what have you. My point is he's accessible. When you're dealing with these commercial lenders, what do you get? 9 to 5. So if a Saturday rolls up and we're shopping and we're like, holy crap, this is the home, we need a pre-approval letter, we have to wait till Monday, and by then it's too late. So shout out to Hot Mortgage and Daren for always effing being successful at getting back with us and responsive to our clients. He was in Costa Rica, and I had a client, and they were blowing up his phone, and he was, while drinking, while doing whatever he's doing, because he is human and he's living his best life, he's responding. So that's huge. So what tips would you give? I just went off on a rant. What just happened there? And I'm not even drinking coffee. Oh my God. It's the gray hair coming through. That's what it is. Oh, look how cute the couple is up there. Another tangent, right? Daren, what would you, this is a good podcast. What would you suggest? And Tammy, you can probably chime in on this because you hear it a lot too, longer than I have. What are some tips to help the first-time home buyer get ready for this pre-approval process?
I mean, my biggest thing is just do the pre-approval first. I mean, when people start looking at homes and they get excited about it, which makes sense, that's the fun part. But you have no idea what you're going to qualify for. So you have no idea where to even start looking for a house. You might be looking in La Jolla, you might be looking in National City. It just depends on your situation. So it's like, how do you even know where to start?
That's like a huge extreme, right? Yeah.
People do you meet and they're like, I want to buy in this area. And you're like, cool, that's great. And then they qualify for something completely different. And then you're looking at a completely different area. So to me, it's crazy to go shopping for something when you don't even have a clue what you can buy. And the pre-approval process is free. It just takes time. It takes your energy to, go online and fill out some information and upload some documents. It probably takes 30 minutes of your time to figure out what you can qualify for and what you're going to buy the biggest investment in your life. You should be able to invest the 30 minutes to figure it out. That's really the biggest thing for me. Just and even if you're not ready yet, figure it, apply. It doesn't cost anything. We can see if you got credit issues. We can see if you need to save more money. We can see, if you need to have a longer job history, whatever it may be, we can let you know. And then we can say, okay, you're not going to be ready until September of this year. This is what you need to do. Go do these things and, reach back out to us in September. But that's really the biggest thing. People, I think, are scared to get the truth of what they qualify for. And so they're hesitant to apply. But we've seen everything. There's nothing that you can tell us or show us that we haven't seen before. So, and
obviously pay down your debt, right? Pay down those credit cards.
Try to get
always. Zero
Sometimes
balances.
It makes sense to keep that money because you need it for the down payment if you're ready to buy right away or something like that, And sometimes that credit history, a lot of times people will pay off a card and close the account, but that can hurt your credit. So again, it's like don't do anything until we look at it. And I can tell you what to do to make your credit better, to get your situation better.
Wow, I've never heard that one before. Usually it's just like pay it off, right?
Well, like Daren said, it kind of depends. And I would say probably one of the main things, other than talking to a lender, because I always have someone talk to a lender if they're getting financing, or obviously proof of funds if they're not, or both. But you need to talk to someone that knows what they're doing and we can kind of give them a blueprint of this is how the process works, this is what's going to happen, because we have to remember, and I'm sure you have to take a step back at times too, Daren, is we do this on a daily basis.
Yeah.
The buyers don't.
Yeah. And
so we have to make sure that they know the process, what they're doing, what the next process is, the appraisal, getting the inspection, et cetera, et cetera, et cetera. They need to know what the process is, because more times than not, if they're a first-time home buyer, they're not going to know what it is. So to me, no matter if you are a new agent and you have someone behind you that's helping you help that person, you need someone that can explain the process, because when you get into escrow and you're like, oh, whoa, wait a second. A lot of times it can scare people. I've seen first-time home buyers be completely qualified, ready to go, and they get into escrow and they freak out because they had no idea what the process was.
It happens all the time, yeah.
Explaining the process is very important. And then the other thing is narrowing down where you want to be. I had someone yesterday, the day before, well, where do you want to be? Well, I don't know. I'm thinking, he called me on a downtown property, and then he's like, but I want a 2-car garage, single family home. I said, first of all, you called on my Hard Rock unit that is not something that you can live in, and it most certainly does not have a 2-car garage. So you need to really talk to them and ask them what their lifestyle is, and what do you want? What are you looking for? So what do
you mean lifestyle? Like, are you single? Was that what we're asking? Because
I need to know if you like to walk places.
Are you a single guy? Are you married? Well, which we can't do, by the way, people. You can't do that.
We can't. Yeah. So, but I was thrown for a loop when he said, "Oh, but I want a 2-car garage." Well, not happening downtown. Yeah. And if it is, it's going to be really expensive. I'm talking 2-car. Attached garage, you work on your car, so.
And Daren, I think you've come across that occasion. I think there's a few transactions, not as of late, but more recently, where they were pre-approved at a certain amount, but they had $1 million mindset. Right? But they're like pre-approved at $750, and they're like, I'm just not looking, I'm not finding what I'm looking for. Well, dude, you're not pre-approved at $1 million.
Well, they show you what they want.
Yeah, here's what I want. You're like, that's so not on your pre-approval letter.
There's a lot of people with that are not from California. You see that a lot that are moving to California and they don't realize they're from Texas or wherever. They realize 750 doesn't go very far in San Diego.
Not in this day and age.
So there again, it lies setting their expectations, explaining. I like to send people properties that are all over. This is, yes, you're qualified for this, but you want this. This is what you're going to get for this and this. Maybe you need to wait to buy. Maybe you need to change, your mindset on what you're going to get.
Well, and that's again, and I would keep beating this like a dead horse, but that's where Daren's really good. And that's why when we talk with somebody, and we know in literally 30 seconds where this is going to go, right? And the first thing is to always defer to the lender, because at the end of the day, we can't even start what we do until we know what that looks like, right? And Daren's so good about just saying, okay, here's a deal. Yes, you can. No, you can't. And here's why. And the cool thing about Daren also is, and we've been doing this a lot lately as well, if not all the time, is even if they're a 6-month back burner, archive it, wait until they get their credit or they have more money down and they're ready, Daren follows up with them like this. We follow, and then all of a sudden they're like, oh my gosh, yes, I'm ready. And his follow-up is insane. I've had 2 deals that have recently surfaced that are ready to go because he follows up with them and I keep in touch with them. And that's key, because it's all about the relationship. So everybody has an opportunity, and that is why we love Daren and Hot Mortgage. And no, I won't rant again. I'm stating the obvious, but we will say this, you guys. Daren is living in Florida. He was living in California for a long time. He's licensed in both states. And then I think he's becoming licensed in other states as well. And the beautiful thing about that is when we have business that are, that go out of state and they need a lender in Florida, like for example, my 2nd Avenue listing, they're based in Miami as well. And I've already told them about Daren. So they're going to be using Daren for all of their transactions, right? So it's about relationships. So it doesn't matter where you guys are, if you're moving and if you need the pre-approval process started, and if Daren is licensed in that state, then we will definitely refer you to him. California, Florida, I'm kind of jealous because like I said, I want Daren's life when I grow up. Because Daren he has traveled to more countries. And I'm a military brat, as you are. And as a child, I traveled all over the place. But then in my adult life, in my previous career, I traveled all over the place as well. But Daren, it's like I'm like, okay, where are you? Where's Waldo?
It looks like it's more than it is.
Yeah, it's fun, But the thing about it is, with everything going on the last 3 years, that we have to find some solace and peace in what's happened.
Absolutely.
And Daren and his wife, Regina, they do that. You guys do that. And which tells me you have such a great work-life balance and play. Let's emphasize play. Because you guys work your ass off. I mean, you've taken your business and your business sense to Miami, and you're killing it out there with, the Airbnb and all of that. And it just goes to show that, what? Just because of what's going on around us doesn't mean you let it fucking derail your life.
No, you gotta keep going.
Yeah, you keep going. So my point is, regardless of where you are, we have connections. We have services provided for you. Moving on, go to the website. We'll have all the information down below. We'll have Daren's information down below. Any questions, feel free to DM us. I'm just happy that we got to share this time with Daren, because I know that, we've been trying to get you on, and you've been out of the country. Hi, which I don't know that we would want to interfere with your, shenanigans wherever you are. But for all intent and purposes, you guys, he's a workaholic. He works his ass off to get you what you need, as do I, and as does Tammy. As a team, we keep each other accountable, which is why Moving On is so successful, which is why we have been so busy and will continue to be busy and grow.
Right.
So having said that, Daren, tell me and Tammy how much you miss us, because you're coming to San Diego tomorrow. You miss us so much that you're flying out to see us tomorrow. You have
Absolutely.
to. We have to.
Yes.
And we're going to give a shout out to the Manchester Grand, because that's where Daren is going to stay. So Manchester Grand, free drinks and food Friday when we're there.
Perfect.
In case. And we will be tagging you. Yes, by the way. So thanks for taking the time. We appreciate you so much. Here's to changing lives and helping renters become homeowners, and really just making this nut work. It's a nut that works well. It cracks every now and again, but how good is a nut if it doesn't crack every now and again?
True.
Exactly.
Cracking builds character.
That's a good one, Tammy.
Right?
I haven't heard you say that one before.
Okay, because I pulled that out of my ass.
Well,
literally.
good job.
Literally. Daren, we appreciate you. Enjoy Miami. We love
Thank
you. We
you.
can't
We
wait to
appreciate
see you
you too.
tomorrow. Say hi to Regina, and we'll see you on the flip side. Peace out,
All right.
San Diego.
Thank you.